thank you so much for being here with us today. Being able to share some fantastic insight into the world of finance, how our franchisees might be securing funding for their new gym location. And so I just wanted to give you an opportunity to introduce yourself.
All right, perfect. Well, thanks so much. I'm Diane Rosenkrantz with Tenet Financial Group, and I've been with Tenet for the last 13 years now. And I help people all across the country with various funding options. My background, I've been with Mass Mutual, Connecticut General, Cigna. I've done project management, business analysis work, a lot of training, a lot of articles regarding funding and financing, do a lot of presentations at different conferences and franchise shows, and certainly, welcome the opportunity to help and be insightful regarding what might be new and different.
That's awesome. So we definitely picked someone knowledgeable here to talk about this subject. That's so great. So we wanted to just jump into some of the questions right now that we have. A lot of people that are looking for a change of life. They're going from maybe the corporate world, or they have been entrepreneurial, but then now they want to jump into a franchise opportunity, and they're looking at USA Ninja Challenge as an option for them. We want to talk a little bit about what type of methods of borrowing that a franchisee could take advantage of to start their business.
Okay, and that's a great point. Now, when people think about funding, it's really broken down into two basic scenarios: equity funding or debt funding. With regard to equity, that's going to be a little more creative. That might be a person using some of their own cash. They might be using some home equity. But what we'll also talk about, I suspect, in the minutes ahead, is a non-debt option where a person could tap into IRA or 401k funds. On the flip side, things that are not equity, debt. What is that going to likely be for USA Ninja Challenge individuals? That's going to be an SBA loan, a Small Business Administration loan. It's also called a 7A loan. And that's going to be quite common as it is a brick and mortar storefront location.
Okay, that's great. So let's just talk about the preparedness that a franchisee needs to have in order to finance a new gym location, specifically through, let's just say, an SBA loan.
Okay. So with regard to that, the criteria is multifold. And so it's a combination that the lender is looking at the individual borrower from their cash, and cash is looked at as what the banker is going to call completely liquid, non-borrowed money. So the bank is going to require upfront cash injection. And typically for a startup business, if it's in the fitness space or a gym space, very often between 20 and 30% of the total project cost.
Gotcha.
And that then brings in a little sub-sentence of what's the total project cost? And that is literally going to include all franchise fees, equipment, the build out, the construction, licensing, insurance, everything looked at, including working capital. So when that figure is determined, and it's going to be different based upon state or geography or area, certainly one larger cost more recently is the build out, simply because raw materials and distribution and all the things that are a little bit more tightened or I guess more forefront than they were years in the past. So of that total project cost, including working capital, cash injection is critical, 20 to 30% of that project. However, it doesn't stop there. The bank is also going to require what they call cash reserves. Gotcha. That is proof that the borrower has money above and beyond that injection. And that, in general, could equate to somewhere between 10 and 20% of that total project cost above and beyond. So cash is king.
Yes.
Credit scores. Individuals going to want their credit scores to be 685 or better. The bank is going to be looking for money coming into the household that the borrower or their partner or their family member is gainfully employed, having a good income. Lender's going to be looking at a person's debt to income ratio, making sure there is not too much debt in comparison to what they're bringing in. And also the bank is going to look for collateral. That's going to be someone's equity in their home, equity in their condo, property. So the banks are absolutely going to look for as much collateral as they can obtain. And probably last, for the broader things, but not least, is very relatable or direct, or as direct as possible, experience in the industry.
Oh, wow. Yeah. So they're looking at a lot of different factors.
They sure are. They sure are. It's many, many things. It's a composite of maybe those 6 things, and then their taxes and credit payment history, a lot.
That's awesome. Well, that kind of gives a really great overview. Are there different loan opportunities within the SBA, or because it's brick and mortar, there's only one option? Is that right?
Well, that is right. Because of the size of the project, knowing that it's, over a couple of few $100,000 or, could be in that range.
Yeah.
The loan that would really be the only possible loan, because there's going to be construction and the size of it, would be a loan that's going to be over $200,000, and it would be a 7A. That's just what they call it.
Gotcha.
SBA loan backed by the government.
Okay, that's great. Okay. And then you talked about non-borrowing opportunities. Is that what you would call like a rollover or ROBS or something like that?
Yes, absolutely. Spot on.
All right.
So that actually has become one of the most common franchise funding options. There is that option. It's called a rollover as a business startup. Gotcha. And those initials do happen to be ROBS. But I want to let your group know, we did not create a funding product that is called ROBS. That is just simply the initials of it. And so we do, as a nickname, we simply call it, the rollover.
Sure.
And what this is that anyone who has pre-tax retirement funds, like an IRA, a 401k, might have a pension, an annuity, 457, a 403B, depending on the industry a person's in, their retirement account might be called something different. But generally speaking, if a person has retirement funds that have never been taxed, and if they're not from their current job, if they're from a prior employer, and so in that manner, a person can use those funds as much as they want, penalty-free, and without taking a taxable distribution.
Oh, wow. Okay.
That's a miraculous thing, because if a person had a retirement account and they didn't know about the rollover, and they said, oh, I just really need to get those funds out, using an easy example, if a person had $100,000 and they called up their broker and said, cut me a check, that person would likely be losing close to $38,000 of that $100,000.
Wow.
Because they would be hit with an early withdrawal penalty, and it would be seen as a taxable event. The rollover allows them to tap into those funds without incurring those penalties and taxes. They can then use that money for any business expenses. They can use it for franchise fee. They can use it for equipment, build out, construction. They can use it for absolutely any business expenses, and even to pay salary. So that really has kind of catapulted that non-debt option, because it's not a loan. You're not borrowing the money. You are literally investing it in your very own business.
That is amazing. So that really covers the whole thing. And like the time frame, let's just talk about time frame. How long does it take for either the process of securing an SBA loan or utilizing a rollover?
Okay, great questions. And the timing is quite diverse.
Mm-hmm.
So Regarding an SBA loan, because it is a brick and mortar business, you've got to get your location and you've got to get the landlord agreement or the letter of intent and the contractor, which you guys help with those things. So that's great for the franchisee, knowing that you've got the resources to assist them. But that sometimes is one of the more timely things, to find the perfect location, because as we know, location is everything.
Yes, it is.
And so not quite as critical as your home that you live in, I suspect. But the timing can easily be, for example, good 6 months, because there are a lot of documents and paperwork and material, and they would have to have the general contractor quote. So, for a business that does need a storefront, it certainly would not be 1, 2, or 3 months. It's absolutely going to be more, but depending on how quick the borrower gets key materials back, depending on how quickly the location is found, timing can be, reduced a little bit. But in comparison, the rollover option, that based upon where a person lives, where their funds are, potentially did they have to separate from service and leave their job, but that timing might be near 5 weeks, give or take.
Okay.
So, and that would be inclusive of everything, the entity being established, creation of a new retirement account for them, their brand new 401k, helping with all the forms and the documents. They'd be completely funded, money in the bank of their choice in about that 5-week time frame.
So that's pretty rapid. That's great.
Right, it is, and which is why it does have a lot of favor, and it is really probably the most common franchise funding option. It's been around since 1974, which most people are so surprised of when they hear about it, but certainly there's a lot of great details that I could share with anyone that would like to learn more.
Absolutely. And yeah, we'll definitely have your contact information alongside of this. That'll be super useful for them to be able to contact you on that. So with the rollover, can someone come alongside them if like a partner or someone that wants to invest? I'm just saying, are there other people that can participate?
Yes, absolutely. So let's just say one individual says, oh, I've got an IRA that has about 150,000. And maybe, for example, they've got a spouse or a partner that says, oh, well, we were going to team up. Well, maybe we'll use some of our own cash, but I have a 401k from a prior employer, and I've got 50 or 80 or 100,000 there. We would be setting up one entity and one 401k plan that's absolutely allowed to accept the rollover from more than one account to fund the brand new business. And then you might have a person who says, I've got 800,000 in an IRA. I totally don't need anywhere near that. Can I take a portion of that? Absolutely. So it is not an all or nothing. Absolutely. Another partner or family member or spouse can absolutely be a part of that funding.
That's great.
With the loan as well, you might have a candidate that is looking at this and they do absolutely have a partner. And that partner also has good credit or collateral or employment. That individual might have, there could be two partners. They both have cash to satisfy that upfront cash injection and that cash reserve. So it didn't rest on one person. If there are two people, they would both be on the loan and they would both be signing the franchise agreement because they're part of the project together. That's
great. Okay, cool. And so things have changed so much over the years, specifically in the last 2 years. And do you want to talk a little bit about how funding has changed a little bit with regards to post-COVID situation?
That's a good question, and obviously timely. With regard to SBA lending, there definitely have been some changes regarding the rollover. There have been no changes, except that it's probably increasing because of some of the SBA changes.
Gotcha.
It is taking longer for the loans to close because the banks are so busy. People are so excited and interested in entrepreneurial ventures and franchising and getting into these new business opportunities. whether they're leaving corporate America or they left corporate America, or they just want to be their own boss. As franchising is increasing, the demand on lenders is as well. So their timing is a little bit longer. The banks are busier. The banks are going to now have what they call a COVID questionnaire. So
Okay.
anyone opening up a business must literally prove that their state or their city does not have dramatic limitations on in-building occupancy that would impact the thriving of the new business. That was definitely more impacted in the first 12 or 18 months than we're seeing now. But the banks still want to make sure that that state or county does have, full capacity with their particular gyms or spaces. And so the key is also cash reserves and maybe some, what do they call, tightening of the strings with the lenders, making it just a little bit more difficult than it was 3-4 years ago.
Oh, I understand. So that's good. That's good to know. So, let's just say everybody is ready to rock and roll. They're excited about moving forward with the new gym location. They're looking at the lending possibilities there. But what other things should a new franchisee be prepared for in order to invest into a gym location?
Okay, sure. Well, critical is the cash. A person can, never underestimate their need for cash, the liquidity, the reserves. So a person might have a partner or might have not realized that you needed 20 or 25 or maybe even 30% non-borrowed. And so therefore, if a person had like a Roth IRA, that's looked at as cash. Your person had a partner said, hey, I'll be a silent investor. I'll be a partner. Definitely be very, very aware of your cash position, of your credit scores. And certainly it's always advantageous to check out your credit report to make sure there aren't problems, blemishes, or inconsistencies that you might want to start to address.
That's huge. It breaks my heart to see somebody go through the process of, going so far into the agreement process and then realizing, oh, this I had no idea was on my credit report,
Right.
Yeah.
So there's definitely a lot of sites people can go to, even annualcreditreport.com will give all 3 scores and all history, but it's very important early on to check your credit scores. You don't want any surprises.
Right. So that really, you're speaking of the things that they could do right now.
Yes, correct.
That's great. So we're wrapping up here, and all of this has been extremely valuable info. Is there any other things that you would want to bring up? Any last comments as it relates to, what kind of things would they be interacting with you on if they were coming to you to seek out lending?
Sure, absolutely. So I would have a consultation with them, review key financial information. I've got a great funding calculator I could share with them. But the key on the non-debt side, on the faster funding, would be for them to know how much do they have in their pre-tax retirement funds, and they might have more than one, to look at for that non-debt option. I'd be able to help a person with that very vast and very detailed rollover process.
Yeah.
And we also are a loan packager at Tenet Financial Group. And I've been with Tenet for the last 13 years, work with people that are looking for assistance on the SBA side, rollover side, or even a combination of both. So happy to help out and kind of peel back the layers of the onion.
Diane, thank you so much for taking the time to go through this important information. There are going to be a lot of people excited to get rolling in this process. So the more information they have on the front end, the smoother the process is going to be. So thank you.
Well, my pleasure. Thanks for your time, and look forward to helping out when the time arises.
Absolutely. Thank you so much.
All right. Have a great week.
Thanks, you too.